What's good YouTube? This is your boy Star Gen Z, and I'm back on your screens again with another video. So today I'm gonna be showing you how I was able to catch over 400 plus pips on gold in just less than an hour. So without further ado, I'll just jump into my chart and show you how I was able to do this. So here on my screen, this is the gold chart. This is the gold chart on the 4-hour time frame. So normally, as this was a day trade, so there's no need for me to start going on the daily time frame. So what I just needed to do is to come to the 4-hour time frame and look at what the market structure is looking like. And clearly, you can see that the gold this week have been in a downtrend. Gold this week have been in a clear downtrend, right? So I just on the 4-hour time frame, if I'm looking for a day trade, what I need to see on the 4-hour time frame is just the market structure or like the market direction. Then I go down to the 1-hour time frame. So on the 1-hour time frame, that's where I'm going to mark my most recent structure, market structure. So if you see, this was the last break of structure we had. This is the last break of structure we had. And when the market gave us this last break of structure, this is the high that created the break of structure. This high right here. This is the high that created the break of structure. But the high was taken out. The high was taken out, giving us a change of character. Giving us a change of character. So normally when you have a change of character, you like that's just a first sign that the market might potentially be shifting from a bearish market to a bullish market, right? So when I had my change of character, what I just needed to do is to look for my valid levels, like to my point of interest. And this is an order block here. The order block created a fair value gap here, which is very much valid, because there are valid order blocks, order blocks and fair value gaps. There are some that are valid and there are some that are not valid. But here, this one, the fair value gap and the order block was clearly valid. Why? We had a change of character, then we had the market really pushing hard to the upside, creating a change of character, then giving us that order block and a fair value gap, right? But also on the 4-hour time frame, if you are looking on the 4-hour time frame, you see that the market is still really bearish. But what happens with one thing with the market is the market will not just like be going down maybe in a straight line or just be pumping down without doing retracement, right? So when you have like the market in a downtrend, we're having lower lows, lower highs, lower lows, lower highs, and all the rest. You can catch these lows if you're also if you actually know what we're also doing and you are interested in catching like counter trades with good confirmations, with enough confirmations. You can also catch this retracement, based on the fact that gold is also a pair that is very volatile. Right nowadays, gold is very volatile. Just within some few candles, the market can move 500, 600 pips and all the rest, right? So when I was on the 1-hour time frame, and this was when the market closed on Thursday. So what I expected now is the market should have like a retracement, tap into this my fair value gap or this other block. Then I'll be looking to catch a buy from here. Right? So we had the market open during the Asian session. We had that retracement, exactly what I was expecting. Tap into my order block. So what I had to do is just to go to a 15-minute time frame. This was by the end of London session. But if you refine this order block, to this extreme point, you see that you'll be having the order block right way down here, right? So you can just keep this order block down here as a 15-minute order block. Then we still have our 1-hour order block here. All right, we still be having our 1-hour order block here. So depending on what we are going to be seeing here, we're working now with confirmations to like to start looking out for buys at this region. So normally I like to trade gold like during the New York session, because during the New York session, that is where you actually see that like expansion that moves on gold, because most of the times nowadays, like you see gold trending now during the Asian session, then on the London session, gold will just be consolidating. This gold will just be consolidating. Then now on the New York session, that's when you see those crazy moves like that. Enough volatility will be in the market, right? So on the 15-minute time frame, I was just waiting. I was just waiting, right? This was before the New York session open. So what I was anticipating before the New York session open was that after we have had this consolidation, after we have had this consolidation, I was expecting to see some sort of like a push to this extreme order block, right? This extreme order block to clear these London lows to this and push this extreme order block on a 15-minute time frame. Then I can be looking now like maybe for an entry right here, like to push the market way up. But it didn't happen. It did not happen. The market just blasted all the way to the upside, right? So on this long candle, this is exactly when the New York session opened, like this long candle. So I was still patient. I was not, like I don't have to chase the market. I just have to set my traps and wait for the market to, give me that clear information, because like just wait for the market to give me that clear information, like to act, then I'm going to react, right? So when the market had this push to the upside, and I had this nice closure, giving us giving me a lower time frame change of character here, giving me a lower time frame change of character here. If it's that the market could push up and maybe leave a wick here, that was when I could be still anticipating that like maybe we might have a sell, because most of the times before at the opening of the New York session, the market is going to have like a manipulation most of the times before that real push is going to happen, right? So when the market had this push on this 15-minute time frame, I went to the 5-minute time frame. Normally, I don't usually take my trades from the 5-minute time frame, but based on the fact that gold is very, very volatile, right? I was just going to the 5-minute time frame to have that like extra confirmation and have that precise entry. So on the 5-minute time frame, we have an order block here, and we also have another order block here, and we have another order block here. So one reason I was not actually looking at this level way down here was not because like most of the times when the market opens, sorry, when the New York session opens, then you have this push. You have this push. It's either the market will just have like a little retracement, maybe to a certain fair value gap. So that's why I was looking at this level and also this level, right? So when I started having this consolidation, here, I entered the position. I entered my first position, I think somewhere around here. Then my stop loss wasn't actually here, like because I didn't wanted my stop loss to be too tight. I don't want to to squeeze the market. I need to give some breathing space to the market for the market to breathe. So what I needed to, like, so my stop loss was a little bit below this extreme, below this other block here, around just around 200 pips, based on the fact that gold is now very volatile. So I was targeting these Asian highs, these highs here. I was targeting these Asian highs. So as I was buying from here, I was still looking at if the market happens to pull back down to this my extreme order block, which I was like still looking that the market might maybe react from here or from here. I just had to enter here. If the market pulled back down here, that's why I gave the market at least some room to breathe. if the market could pull back down here, maybe I could just also capitalize on the trade, right? Maybe I could just also capitalize on the trade. So as I entered here, just within and just like that, within 1 hour, I hit TP and I was out of the market. Normally, this type of moves doesn't happen on the market like all the times. This type of moves don't happen in the market all the times. But what you have to do is just like I just I have my plan, I have my strategy that I follow on a basis, like to catch my trades, right? I just have to come to the market, I analyze the market, I follow my plan. If I see my setup, I'm going to take it. If I don't see the setup, I just have to wait. I just have to sit on my hands and maybe come back the next day, right? So when you see an opportunity, when I see an opportunity, I just take it that the market is going to do whatever it can do. And I didn't just project this buy on trading view. I actually took the trade. So if you are enjoying this type of breakdowns and you want more from this channel, just make sure you subscribe, like, and share this video to some of your friends which are inspired or which want to learn more about the foreign exchange market. Till then, see you next time.